Hello and welcome to my next video. In this video, we're going to look at the Central Bank of the United States. That's the Federal Reserve System. So what in the world is the Federal Reserve System? Well, I've already told you. They are the Central Bank of the United States. So I want to go back to central banking in the United States. Actually, central banking in the whole world goes back even into the 1600s. I think it started in Sweden. But let's stay with the United States. So there were two attempts at quasi-central banks. There was a first Bank of the United States. They would just call it Bank of the United States because at the time it was the only one that had been established. And then there was a second Bank in the United States. These were highly controversial and there was a lot of politics involved. So they were both chartered for 20 years and they didn't last past their 20 years. But by the early 1900s, specifically after a panic in 1907, a lot of bankers and certainly government officials saw that there was a need for a central bank. And so they kind of got together. There's a whole story behind that, but we won't spend time on that. It's fascinating. The bankers actually met at a place called Jekyll Island, but again, we won't go into that. So after that panic of 1907, they got together, as I said, on Jekyll Island, and it was hammered out the idea of the Federal Reserve. So the Federal Reserve actually was enacted into law by Congress and signed by the United States in 1913. And I want to point some things out that sometimes are not. First of all, it's to provide for the establishment of Federal Reserve banks. Notice this is plural. Most countries have a central bank. We actually have 12 of them, technically. To furnish an elastic currency, that means just to respond to the, in the day, there were no credit cards, those kind of things, but respond to the money requirements of the public. In other words, like around Christmas time, maybe they need more cash to buy presents. Other times, maybe they weren't spending as much, so didn't need as much cash in circulation. So that was an important role for stabilizing the economy in terms of its monetary system and to afford a means of rediscounting commercial paper, not and, but in addition to. That's something that actually they didn't do until later on. To establish a more effective supervision of banking. So the Fed's one of actually three regulators or supervisors of the banking system, but that's really not where our emphasis will be. So let's look at the structure of the Fed. There's 12 district banks. That's why I said there's not one central bank, but 12. Overseeing the whole system's a board of governors. And then there's another important committee called the Federal Open Market Committee. And then there's other, like the Federal Advisory Committee, for example. Now, in terms of the Board of Governors, these are 7 members that oversee the entire system, and they serve 14-year staggered terms. That's the idea that everyone on the board's not changing at the same time. So it's to provide some continuity. Also, is to kind of get politics out of the Fed because they serve long terms, kind of not quite the extreme of federal judges that serve for life, but certainly 14 years is long term in terms of political offices for a particular one. Now, one of these 7 is appointed as the chair of the Federal Reserve Board of Governors, and then they are reappointed or not reappointed every 4 years. Technically, if one were appointed and then at the end of the 4 year, the president and Senate, will say more about how that happens, but they didn't want that chair. Technically, that chair could stay on as just one of the members. Typically, that doesn't happen. So the current chair is Jerome or Jeremy or Jerry Powell. He was appointed by President Trump in 2018. Now, the Federal Open Market Committee, very, very important in terms of what we will later call monetary policy. So all 7 members of the Board of Governors are voting members on the FOMC. Gets to be an alphabet soup. So all 7 BOGs are on the FOMC. And then 5 of the 12 district bank presidents rotate on it, and actually one of them always, excuse me, 4 to 5 rotate. One of them, the CEO and president of the New York Fed's always on it because of the fact that the financial capital of the United States, if not the world's New York, and so that's in their area. We'll talk about more why they're important later. Now, the Fed is a banker of the United States government. They're a banker of banks. They're a regulator of banks, and very importantly, they conduct monetary policy. So that's a very brief, overall down and dirty discussion of the Federal Reserve's system, and we'll see why they play such an important role in the economy.